They didn't know that AI was fixing to blow. They didn't know that this was not just for the cloud. That sometimes Big B know what he's talking about. Damn. Anywho, hey, ladies and gentlemen, do that wind effect. Bring it in. I ain't playing with him. I just ain't playing with him. I really just don't be playing with him. Bring it in. Bring it in. Bring it in. All right, round circle event, guys. Listen, I've been on pizzle with these calls, but like I said, guys, we expected market volatility. We called at the beginning. We're going to give us a little roundabout of expectations of what occurred this week, what we might think might occur next week. But just for all of those that picked up and jumped in those recommendations, Tesla, NVDA, Microsoft, Amazon, who else am I leaving off? Apple. XRP, Bitcoin, which these are cryptos right now. Y'all got to understand with crypto, it's the time to buy. Don't expect some massive run up right now while the feds are trying to chop their knees off and try to get the sales in there. But this is the time to be loading, and y'all gonna watch in the future when I'm sitting up here like this, just like I am right now with these stocks that up over 50 and 100% in the last month. I was screaming from the rooftops. I was yodeling, and people were sitting there on the sidelines. Now people want to jump in when the thing up 50%. Hey, don't worry. There's much more what would come with that, but y'all need to tap into this tech and get you some tech and tech so you can have some tech with a side of that tech. I'm telling you, this is how your money's going to be levied and protected through this, what we call, people want to be, oh, it's not a recession. It's a little bit of technical recession, money recession. Guys, there's hard times to come. The best way for your money to be protected right now in this market, not financial advice, but this is how I'm rolling it, is through innovation, which it has always been there. I've never seen anything different. But before we tap into that, again, I also got some cool information. I guess we've been piecing together over here. I like to know why, the why behind things. We looked into the fact, again, now these are just my opinions, but everything still correlates with the short interest on market, the fact that they're sending 100% of utilization to the dark pool, and it's not just a certain percentage, but also came across the interesting fact when I went to chat GPT'd it myself, which of course we're going to use AI, but I figured out how they're able to keep the short interest down at 20% or 22%, things like that. But let's double tap in here with our boy Kenny Polcari, speaking up on what you need to be doing with your money. All right, let's get to it.
Your money, why not? Look at futures, please. The Dow's going to be up over 50 points at the opening bell. Remember, it was up, 400 yesterday. And the NASDAQ up another 60, way above 15,000. It looks like a rally, doesn't it? Kenny Polcari with us this morning. I want to talk AI. Microsoft says AI, you know what I'm going from here. AI will help generate $100 billion in extra revenue for them by 2027. Are you on board on AI?
Yeah. Listen, I am on board on AI. You and I have talked about this. I think it's very much in its
Y'all seeing any names on there?
Right? So I think there's a long way
any
to go.
familiar names on there?
You know, I wasn't panicking and getting out of the market last year like you didn't panic when everyone, half the street was telling you, get out, get out, get out.
When others are fearful, be greedy. When others are greedy, be fearful. Just remember now, I told y'all this a month ago, before all this run-up happened, before NVIDIA bopped up from 283 to 300 to 400, that while the media was out here screaming, fudding your ears out, I was like, guys, either way it goes, this is the future. Anybody, there was somebody that came in the comments, family, which I understand, guys, this ain't a knock, this is a learning experience, but he's like, well, if you could buy 100 shares of the stocks you're saying, why would you even buy anything? Guys, don't be complacent and get stuck up on the money value of, oh yeah, it's at $400, I can't do it. You need to go and get you a Weeble and buy fractional shares. But this is a percentage thing of your money. It's about the growth of your money. Not about, oh, AMC's at $5, I can get 1 billion shares. Well, yeah, but you don't want 1 billion shares of AMC. You don't need that many shares of what we call high risk, high volatility plays. They can make a bunch of money. You don't have to put that much asset into it, right? But plays that might cost more money, but also give you a steady return, are companies of the future, high pricing power. Companies like Apple that have enough money to buy Disney, like Keenan Gray said. This is something that y'all, like I said, to each person to own. I'm not gonna knock how you trade. You're the captain of your ship. You're the CEO of your LLC. But all I say is, if it don't make dollars, it don't make sense. Period. And if you're sitting up here and you haven't been delving into this AI, you're not setting up for the future, you're gonna learn a quick lesson about these markets, which I learned over the last 3 years. It will bend you over one of these counters like this right here. I'm just telling you. So play it how you want to. But we gonna give nothing but money tips over. You hear me? Back to it.
We stayed in. We continued to add, and look where we're going now. And artificial intelligence really at the root of this recent rally. But yes, I think it's going higher over the long term. I think you have to stay involved. I think you have to have exposure to the sector, whether it's Microsoft, NVIDIA, C3.ai, whatever. Listen, even JP Morgan gives you exposure to artificial intelligence.
I'm holding off on C3 AIs right now, guys, just because of the simple fact that there's a difference between the chip creators of AI and then the programming of it. C3 AI really doesn't have any in-depth program. Right now, they're just in part of the AI sector and they're getting some of that byproduct. But there is no head honcho of the programming sector yet. Perfect place to find or plant your money in to find some C3 AI could be the big dog of that, but we're still figuring out. But what I do know is that big dog, NVIDIA, that big dog, okay, all right. Apple, those big dogs, okay, all right. Y'all do what y'all want to do with it. I'm going to tell you like this. Tesla, them big dogs, come on, we got information we'll cover at the end of this video.
You're getting that exposure.
So are we now off to the races?
Well, listen, Mamma Mia, are they ever gonna take a breath, stocks, because they just go straight up in a line, which you and I both know is not sustainable, right? It has to come back. Now, I'm bullish long term, yes, but I think that this rally that we've seen over the last 2 weeks, really over the last 3 months, I guess, is a little bit long in the tooth. It needs to take a break, but that doesn't mean all sectors, because there are some sectors that have underperformed that have now starting to see some real investor love and some money going into them. But I think
long term, like I say, you need to have an account for your gambling, about 10 to 20% max of your of the amount of money you have, right? So if you had $10,000, there shouldn't be more than $1,000, $1,500 in your gambling portfolio. Right, and $1,000, $1,500 in that portfolio can grow wicked. Either way it goes, but or 1,000 to 2,000, I guess. Say if you want to do 20%, say if you're a more risky person. But for these long-term plays, we're talking about 5 to 10-year horizons. This right here is where most of the traders get lost and get screwed up and chewed up and losing. Because you couldn't see the hindsight of 5 years down the line. You weren't thinking about when Apple drops that Apple car. You know what I'm saying? Tesla, the simple fact that everybody's adapting their charger. Tesla is the big dog of the electrical grid. They're not going to be replaced. You to Allah. You to Elon. You hear me? In Elon, we trust that money. You hear me? Come on now. Hey, I don't know how much more I can stress
and while I'm not panicking about it,
but I'm going to keep stressing these videos.
I want to see it kind of retreat a little bit and consolidate and build a base and then move higher once again.
Boys.
But look, I'm along for the ride. I'm happy it's going higher, so... And you are too, I'm sure.
Oh, I'm absolutely delighted, believe me, Kenny. But I sense a good deal of FOMO, fear of missing out.
Yeah.
The market's going up, people are not in, I've got to get in. You're seeing a lot of that, surely.
Well, of course you are, but that speaks exactly to the point that you and I discussed. All these guys a year ago, 6 months ago, that were talking about S&P 3000 and, oh, my God, it's going to be worse, and it's going to be 2007 and 8. And so a lot of people got nervous and they got out. They went into treasuries. They did cash. They did other things. And
I told you the whole time. I said, wait a minute, 5%? Sorry. Yeah, I get a little aggressive. But hey, I'd rather blow the account up than sit up and have my money stuck for 12 months for 5%. You got $10 million, all right, I guess. But still, that's just not going to work. I'm not about to loan, because that's all bonds are, is loans. I'm not loaning money to America and y'all give me 5% back. I might well just go and hold some SoFi. I might just put it in SoFi. What are you talking about? I mean, this is crazy.
When that never came true, they all realized they're kind of underinvested.
All right, Grandpa, sit over there.
Thing. And so now they're all running in, right? It's the fear of missing out versus the fear of being in, which I call phobia, right? The fear of being in. And so now you get all these guys, you get all these asset managers that were underinvested in tech and underinvested in the market as a whole because they were nervous, and now they got to jump in. We're halfway through the year, and it doesn't look like S&P 3000 or 3200 or even 3600.
No,
it doesn't feel like that.
I've got 30 seconds. Tell me your AI play now.
Well, the one I like the most right now is C3.ai, right? Because first of all, it's only a $40 number. I love Microsoft. I still own it. I love NVDA. I still own it. I love Apple. I still own it.
Yep.
But C3.ai, I started getting it at 20. It's now trading at 45, and I still like that one as a real AI play. And we talked about that months ago.
Kenny Polcari on AI. Good stuff. Kenny, have a great weekend. See you next week. Thanks very much.
You as well.
Beautiful. Beautiful. That boy Kenny Polcari back with it again. All right, guys. Hey, let's just double tap in here. We're going to cover some of our AMC information and then just trickle into some of those interesting facts that y'all, like I said, I like to provide evidence for why I think what I think as far as how it comes with these stock, things like that. And hopefully y'all are getting, like I said, we call it edutainment, which is education and entertainment together. Because like I said, I noticed a lot of retail YouTubers ain't talking about a damn thing. You sit up there like, what are you even saying? But guys, double tapping our AMC play. Guys, we're back to that barcoding pattern. I'm starting to notice that I feel like that max pain has dropped down from $6 to $5 as there's a massive sell wall. They won't allow this thing to press up to above $5. When we did go up to $5, they literally came in and blew it. They were sitting up there with 100,000 shares. Now we're tickling down over here. This is crazy how I'm watching this thing. I can't even record. This was at 50,000 shares available like 20 minutes ago, guys. I'm just telling you. I mean, look at this. Look at this. Now we're back down to 0%. They are maxing the contract out on it. And I want to show y'all specifically what another tie-in. Like I said, I want y'all to understand the full picture of what we're doing. Like I said, it might not be the thing that we always want to hear, but it's the truth of the fact of the matter. Pulling in, we're looking at 22.62% short interest, 7.31 days to cover. All malarkey, all irrelevant information. Double tapping in down here. I want to see if they have it loaded up. Short interest now dragging back up to that 60% number. Now, remember I told you, when we start to clip below that, what's that, 50% and below, you're going to have green days. Going back to those 6%, you're going to catch red days. That's what we call because they're sending 100% of the volume to the dark pool. There's nothing hitting the lit exchange, right? And I said, if I said every single day, I'm like, we're at 1 billion trillion short interest. Well, double check this. I came across something and then I ran through chat GPT. This is how they're holding and reflecting the 22% or 20% shortage when you know it doesn't make sense. It's called stock loan substitution. Of course, guys, we're using that sweet AI, baby, because it's making us some money. But no, let's double tap in here. So I typed in, what is stock loan substitution? Stock loan substitution refers to a financial practice where an investor borrows shares of a particular stock from a lender and then immediately sells those borrowed shares in the market. Now, this is what market makers, short hedge funds, people that are short synthetic shares, things like that. We'll pull it together. Y'all just keep following along with me. Get this off my screen. Let's see here. And then immediately sells those borrowed shares in the market. Typically, the intention of repurchasing them at a later date. The investor replaces those borrowed shares with synthetic position, usually through a use of options or derivative instructions. Now, remember where I put in a video, y'all go check it out, a video of how in future plays, if we do end up in short squeeze, like I said, this doesn't run me away. I took time to learn about what this is, right? But the cue of how they got us stuck in this was the buy and hold mentality with trading plays. Never again with any short squeeze where the GTII, Bed Bath & Beyond, any of that, am I going to be stuck there holding? I'm buying in, selling, buying in, selling. That's what forces these hedge funds and market makers to actually go and retrieve those shares immediately, and you can keep that buying pressure actually fluid. It actually push your stock up. If you buy with the intention of never selling until a certain price, they don't need to go retrieve the shares until you're gonna sell. If you're saying, oh yeah, I'm gonna hold AMC until my balls fall off, well, guess what? They're not gonna go and get those shares until your balls fall off. They can synthetic produce that, right? So that's what I put in people. At first, it was a little flat, but a lot of people were like, yeah, we understand where you're coming with that. But a lot of people they were like, I don't know if I ever want to be in a play like this again. Which at that point I said, I fully understand, but that's why you need to be building that long-term portfolio so you know the mass majority of your money is growing, while over here you can play around and gamble and learn things with that 10 to 20%. But let's follow back through. We're going to, just so we can keep going. The investor placed the borrowed shares with a synthetic position, and usually through the use of options or derivative instruments. The purpose of stock loan substitution is to generate additional income or benefit from a decline in the stock price without actually owning the underlying stock. By selling the borrowed shares, the investor can capture the proceeds from the sale and potentially profit if the stock price decreases. Meanwhile, they establish synthetic position to maintain the exposure to the stock's price movement. The synthetic position created through options or derivatives mimics the performance of underlying stocks, allowing the investor to capture the benefits without directly owning the shares. This strategy can be used by institutional investors, hedge funds, or other sophisticated market participants to enhance returns, manage risk, or implement complex trading strategies, algorithmic trading strategies. Guys, bing-a-ling, bing-a-ling, bing-a-ling. Somebody ride with me on this now. You best give me some likes off of this. I'm telling you now, it's important to note that the stock loan substitution involves certain risks such as market volatility, counterparty risk, and potential losses if the stock price rises instead of declines, as anticipated. Furthermore, the price may involve regulatory consideration and should be carried out by experienced investors who understand the associated risk and requirement. Guys, what is going on totally with our play? They're using the dark pool to encapsulate and take off all the actual true buying pressure, and they're putting that on ice. All buying pressure is putting on ice because y'all aren't selling anything. Not saying that it's too late to sell now, but for future reference on any of our short squeeze plays, the trigger of that is selling. You buy it when everybody hits it, even if it's $5, you sell that damn thing, sell it. That then is going to force them to go and get those shares. In the midst of them getting those shares, you buy again. When it starts to trickle down, you hit it again. That's what ramps and send these plays off. If the incessant hodl, the hodl is what gets you screwed in a trade. Long term, you hodl. I'm hodling Tesla. I'm sitting up here frolicking in the fields with Elon because I know we're going somewhere. That's hodling, right? But you don't hodl a trade. You don't hodl with a CEO that's an operative that's working for in terror, right? That's not a play that you hodl. You trade that. You leave him with the bag, not us with the bag, right? But I just pulled this together because I said I want to fully link basically what Lou had said a couple of days ago when he was like, you're not actually even buying the shares, they're going off and buying other companies. You might be buying other stocks and things like that with what they're showing, and they're showing your account AMC because they're not expecting to have to go and actually go track down those failed deliveries of those actual shares, right? Up until the point that you actually sell, right? Which could be something interesting to think about because, well, no, like I said, if June 29th were to trigger a massive sell-off, right? That would actually be something that would actually put a stick in their spine, right? Just off the fact they would have to go and retrieve those shares. But that's why I say, we got a lot that's coming up. I don't know how long they plan to go after this hearing. If it is passed, like I said, I have anticipation that they're going to pass it because after I realized that there's treasury money invested with these hedge funds, they're not about to let these hedge funds go under, which is a simple fact of how big this play is, guys. This play is so massive. It's unbelievable, which we already knew, but all this right here just connects those last few dots to me of understanding what's going on and where we are to allow you to make the most educated decision in how you're trading with things. But I feel like this right here is a dime of information. Everybody that watched through the video, obviously, you're going to be up one. Let's double check back in. to something, a little bit sweeter. Hey, spelled it the wrong way. Tesla stock. Guys, Tesla's sitting at 261, guys, after again hitting all-time highs the day before yesterday. Just so you can see the strength of how this movement is. We hit all-time highs. We have a sell down to 248, and now we're right back up there. We're looking at a double. We hit a double top, which I expect to further sell off. But look at how the stock is catching itself, guys. This play is about to do something. It's about to do something. Jay Clark, hey, what I told you, baby. I said this tech thing is something, and you came in a little bit later. Had you come in about a month ago when I was screaming that you be even greener. But everybody that's buying in these plays, congratulations. Tesla, NVDA, Apple, Microsoft. We're running up out the bando. All of these plays hitting all-time highs. Think today, 184, all-time high. All-time high. Who else? Let's see how Microsoft's doing. Pink, all-time high. Let's see who else. Who was that? Tesla, NVIDIA. That was Microsoft. Let's see if Amazon's in. I want to see if they're getting a flick off of this. Okay, I was about to say. That couldn't be their all-time high. But look at this movement. And yes, I did capture in here at 100. Just so I could ride that bad boy up. Because guess what? They're going to soon be hitting all-time. Hey, listen, guys, this tech sector is where your money is going to ride out. I'm telling you now, I can't scream it any harder. But guys, double tapping in, got a little bit, last couple things to double check in with this, guys. And Terra Capital reported acquiring more than 2.7 million shares in put options with AMC stock, AMC Entertainment stock for the month so far of June alone. They picked up 2.7 million more shares of puts. And Terra Capital also disposed of the total of 3.9 million shares of APE at 160. Guys, now I want y'all to link in here now how we realize with these options, right? How this all links in with the stock loan substitution, how they're holding the stock, how they're profiting off this as well, guys. So you must note that while they said draining money with failed deliveries, they're also making money by running this scam because we don't have feds, we don't have the courts, right? Even though I know there's a hearing coming up in New York, but I got to see that play through, and obviously I don't think that's going to hit before the 29th. If they were to say, hey, you can't do this conversion, all right, that's going to be a beautiful thing. But like I said, I still expect this conversion to happen. And down the line, I expect, believe it or not, AMC to have movement, which is something that I keep saying to the family. Irregardless, the price of AMC is going to be above $5. I'm just not going to be sitting here watching my money get crumbled until we get to that point. I'm going to play this play like a trade. The arbitrage of APE, I'm going to play that. I'm getting in that, getting out of that. I'm making my money back, and I'm also going to come back in after things settle to ride that way back up to the point to where we know that it should be sitting and trading, or where Cinemark's trading, at least, right? But you don't have to sit there and be the back the punching bag of that in a trade. These are trades. These are not long-term holders. These are trades. You can trade that and make bukus of money like they're making off of you. You can flip that same card back on them, but these are just things that I'm bringing people's attention. Not saying that you have to, I don't care what you do with your money. As long as you're in the market, that's all that I care about. You're in Boston, you're going to learn one way or the other retail. And my main thing about it is that in this big boy market, the one thing that I do ask of y'all is don't be the type of person where if something bad happens, I'm done with the market forever. That'll be the worst decision of your life. Take your lashings, take your beatings, learn, and move on and evolve as traders. That's what we're doing over here. Is we're evolved traders, right? We're moving further and further, looking at things, moving into options, things like that, to make money. We're putting thoughts on yachts. That's not no joke. I put money on it. If y'all don't think I'm going to have a couple thoughts on yachts in these years to come, not 70 years, I'm talking about the next 10 years. Watch how we do this thing. I'm telling you. Stick along for this ride, for this Money Mafia. We ain't doing nothing but making that cash. And like I said, I'm going to bring it to you over and over and over and over again with proof after proof after proof to the point you're like, okay, I'm riding with it. Which is why we already have the subscriber count growing up like this way anyways, because we're actually talking about real things over, right? Hello, NVIDIA is the only near-term beat in Raj chip maker when it comes to AI analysis. Let's say it together, bullish. Guys, I can't. I'm gonna just keep putting it in front of your eyes because eventually you gonna catch. You be like, all right, let me just take a look at it. The last 30 days alone should have let you be like, damn, I could have had my money running up. You know what I'm saying? Hey, let's pull up and see here. We already went over that. Another one here. Growth in Apple could be a huge winner for the next decade and beyond. Guys, remember, Apple has enough money in cash on hand to buy Disney alone. Plus the products. You need this. You need this. I'm recording off of one of these. This is top tier technology. You can't live without it. You're addicted to it. You need it. You're watching YouTube off of it right now. You need it. This is money. Mr. Krabs, and they got so much stuff to come as far as that Apple Car and things down the line, guys. This is what we call long-term hedging. And then I have my fun in my day trade portfolio. But some of that, we talking about set it and forget it. You talking about stress-free? Guys, hey, I can't tell you what to do with your money, but all I can do is make recommendations. The last article we're going to look up here, which I already kind of covered, but Tesla stock is on a credit run. Here's why. And we're just going to read this little insert here. Tesla stock, TSLA, yes, sir. They might as well just call it Elon, baby. Elon. That's 4 letters. E-L-O-N. That should change to Elon. Up more than 50% over the last month in one of the company's best runs in value ever. I keep telling him. What I have to do to make you see it? Do I need to hire a crystal ball lady? Do I need to hire a tarot card reader for y'all to get what I'm trying to lay down? Sheesh. Here's an idea of why Tesla stock is gaining momentum. Macroeconomics has a big impact on large stocks like Tesla, and improvements on that front have helped the automaker. But the Nasdaq is up 10% while Tesla is up over 51% over the last 30 days. A string of good news seems to have helped Tesla push higher at a faster rate than the rest of the market. Most recently, the adoption of NACS, which is Tesla's connector, guys. Ford, General Motors, everybody, even the Blink chargers up there in Canada, Tesla has now been set as the standard for the charging. So all these companies that are even coming out with EV sectors are going to be adapting and using those chargers for Tesla. Guys, they have the electric grid in a chokehold. They had a chargers in an arm bar. Guys, play with it. I'm telling you now, that's all right. Y'all can live vicariously through me if you don't invest, because I'm going to have me a senorita over here. I'm going to have me a senorita over here. I'm going to have me a couple of them biking the bike. Hey, all on a yacht, doing a couple wicked things with a couple thoughts. That's all I'm telling you. What was I at? As the new North American charger standard has resulted in several Wall Street analysts considering Tesla supercharger business. Guys, because it's past just Twitter, it's past SpaceX, which is a banger, it's past just the cars, which is a banger, right? The technology, the self-driving, that's a banger. That's what the takeover is. The grid is a banger. The charger is a banger. That's what, y'all, all right. Play with it. If you think Tesla is high at 260, I guarantee you're going to be mad AF at yourself. You're going to be mad AF at yourself in coming these next 5 years. Guarantee you. Don't forget they got an AI robot. Nonetheless, with electric vehicles from, here we go, General Motors and Ford are adopting a connector, taking advantage of Tesla's supercharger network. Analysts believe that Tesla could start making billions of dollars in revenue per year from charging business by the end of the decade. All right, hey, if you can't see it, that's fine. You're gonna see it through me, because I'm telling you, we're gonna hit it again and hit it again. I've been green as a bean with every one of these call outs, path, all that. Green as a bean. No, that's not shooting, guys. I live next to the baseball field. Fireworks. We probably lost the game, but nonetheless, we still hold it down. Birmingham Bears, baby. Hold it down, baby. Listen, guys, it's going to be a good night for me. as it's already been a good week. Hopefully it's a good weekend for y'all. Like I said, we'll probably tap back in tomorrow, if not Sunday. Get ready for that prep video. Y'all come in and tap for that prep video. It wouldn't be so lost if you just come in and tap in that prep video. For all my family that does come in here readily each and every single day, I love y'all boys. I love y'all. Y'all know I love y'all to death. Listen, we got more bangers to come, more money to make. Guys, what a great time to be alive. What a great time to be in the investment market. But there's one thing that I do know, and you know what's next, don't you? Hell, somebody done died out there. You know what? I'm actually gonna let y'all catch a little view of this here. Oh, 1 second here. 1 second here. Let's. While I got y'all, just something a little entertaining. Hold on. I want y'all to see all the nonsense that's going on right now. Hold up. Put my damn camera there. There you go. Tesla! Yeah. Give y'all a little visual at the end of it. That's what y'all deserve. Catch the people in my city, baby. Yeah. There we go. Yeah, set up 100,000 in fireworks, why don't you? Beautiful. Jesus Christ. And y'all better have won. They better have won. But guys, like I said, much love to y'all family. Y'all know how we do it over here. Yes, sir.